This is Profit Makers. Today, we're going to go ahead and discuss about crypto. Just a little for those who are not in the Profit Makers community, they're joining here for the first time. Profit Makers is a community where we sell premium on options, or we actually build advanced strategies on options. So anyone that is interested in learning or get insight on that are welcome to join our Discord group, which is free to all. They can definitely at least get the basic training, basic concepts on at no cost. And as we approach to the advanced strategies and where we actually are demonstrating our premium selling skills, we have a subscription model there. So you're welcome to join. We've shared the link on the chat message, or you're welcome to visit our ProfitMakers.trade website or ProfitMakers.tv to go back and see our videos that we're sharing publicly to everyone. So with that, I'm going to hand off to Leon, who's going to introduce our Profit Makers guest speakers today. And just so that everyone is in tune with what we're doing today, is we're educating folks about the technology behind blockchain and crypto, and at least get folks up to speed.
You can watch this
Uh,
on
we,
Zoom.
we have
Doing a presentation.
key speakers from this environment, and
Go
they
to
have successfully built
zoom.us.
crypto technology in this environment. So I'd like to go ahead and hand it off to Leon and go ahead and introduce them. And feel free to passionately speak about your experience in crypto and all that. Be nice.
Yep. Yeah, I'm Leon Gabon, part of Profit Makers and from the Dumb Money community. So I'm a crypto trader and stock options trader as well. And I've known Omar for a bit too. So I ran, been part of the Dallas Bitcoin meetup since 2013. And I believe me and Omar first met in 2017. So, like Bitcoin is the first cryptocurrency, and it invented this way for people to trust each other, without even knowing each other. So that's kind of vaguely what a blockchain is. So with that, Omar saw some, problems in current blockchain design, and that's why, first generation blockchains, they're kind of slow, but they have high security, very well decentralized. Um, but they always had, like, the good ones had this 2 out of 3 problem. So you, with cryptos and blockchains, you want security, you want decentralization, and you want scalability or speed. Now, and most can only do like two, like one, but like Bitcoin and Ethereum, for example, they're both high security, both very decentralized, but not very scalable. That's why you have Ethereum 2.0 and all these other new projects being built out. So when Omar asked me to, help get some thoughts on his project, Shardus, and I asked him, like, how are you going to solve these 3 things: security, scalability, and decentralization? And he had a great answer for all 3 of that, and that is what makes up the Shardus project. So yeah, pretty excited to kind of show you guys this, and it's a project being created in Dallas, Texas. So with that, I'll hand it over to Omar. Oh shoot! I think I muted him. How do I unmute him?
Yeah, he can unmute himself. Like he's the only one that can unmute. So he'll unmute here in a second. There
Hey,
you
can you
go.
hear me?
Yes,
Yep.
we can hear you now.
All right, great. Thanks for the intro there, Leon. Um, so let me share my screen. Let's see. All right. You guys able to see that? No?
Not yet.
Okay. Let me see.
Click this button
There we go.
and then choose which screen you want. So the desktop.
Chrome browser.
Probably desktop. That's gonna show then.
Let's see.
Which is your meeting? There you go. Now you're sharing.
All right, can you see that?
Yep.
All right, let me get to present mode. Oh, great, I got this funny thing up here. Trying to get rid of. Okay, cool. Thank you very much for that intro, Leon. So just want to give you guys a quick intro about what I'm going to be talking about today. Just we thought we'd just do like a intro to cryptocurrency. I don't know how many people here are familiar with cryptocurrencies, but I'm going to kind of assume that you're not that familiar. And then just a word of caution. So, we're going to be talking about how profitable it is to trade crypto and all these kind of things, but don't take our word for it. Right? Do your own research. None of this is investment advice and all that good stuff. So, yeah, just a little bit of background about myself. So I did my master's and undergraduates from Case Western Reserve University in Ohio, and I joined Raytheon after that. Worked there for a year in their missile systems division, building chips, and then I joined NASA and worked there for 10 years. And then I moved to Dallas in 2006 to join Yahoo as principal architect of their multimedia streaming center. From there, I worked at Zynga. That's the company that made Farmville, which was a really popular game at one time on Facebook. And then I've done a lot of consulting for internet startups and mobile game development companies. And I, I've been in the blockchain space. I think I found Bitcoin back in 2011, but I had been researching money since like 2008 when Ron Paul kind of got me onto that topic when he was running for president, and he would always talk about how we need to go back to a sound money system. So it was kind of good timing. And yeah, so I've been like in the crypto space since 2011, and in 2016, I finally decided that because I've always had this view that what we're doing with bit with the Bitcoin and blockchain technologies that we have currently are just not scalable, and also they were getting more and more like less decentralized and more centralized, and I wanted to do something about that. And so in 2016 I left my position at the company that I was consulting at, and then went off and started building a more scalable blockchain. Uh, so uh, so I've been focused on that since then. And let's see. So Shardus is the project that I'm working on, and it's basically uh, you know in a short description, it's basically a more scalable blockchain that's also focused on decentralization. And then the other things are, of course, we want to have it be more energy efficient, and also have it very user friendly for developers to use and build with. And we're working towards having something usable in mid 2021. So um, that's kind of a long intro there, but so now on the topic for today, I'll tell you a little bit about cryptocurrencies and then what we think the future holds for cryptocurrencies. So yeah, this is definitely something that's going to be very disruptive, and a lot of people are starting to look at it from that perspective, and recognizing that there's a lot of potential with Bitcoin and other cryptocurrencies. So before you talk about cryptocurrencies, you have to think about like what's actually powering that technology. So blockchain is the technology that actually powers cryptocurrencies, and essentially it's really just a peer-to-peer network. And the word blockchain actually kind of refers to the data structure that's used by all of the nodes that are storing the data in that network. And you know, cryptocurrencies are really just one application that can be built with blockchains. So really, blockchains, I think over time we'll see is actually the key thing that comes out of this era. I mean, of course, cryptocurrencies are going to be a big game changer in the whole financial space, but as far as the technology space, we're going to see that blockchain is huge. And it's very disruptive. There's a lot of different uses for blockchain technology. We're just starting to get familiar with some of the things that it can be used for. Of course, the financial sector is the the area where it can most readily be applied. And now we're starting to see very, very innovative uses of that, especially in the DeFi space, which is decentralized finance, where people are coming up with clever ways to create stable coins without needing to be pegged with what they're actually uh, stable and pegging to, without actually needing to have those collateralized. Coming up with ways to do uh, automated market makers, so people can exchange one asset to another in a very decentralized manner. And I think we're just getting started, and there's going to be a lot more uses for blockchain in terms of a lot of the other uh, services and things that we see in the world, especially things like supply chain management, asset management. We'll probably see it in voting, uh, record keeping, credentialing, so many different areas. So that's blockchain is really what's powering cryptocurrencies. But then what's cryptocurrency? Basically, it's the way Satoshi described it when he released Bitcoin. It's a form of electronic cash that can be transferred between two peers without needing any kind of a third party to help facilitate that interaction. Like if you think of cash, both parties need to be there physically, and then you can transfer, do a transaction and exchange the cash. But when the two parties that want to interact are in two different locations, we typically need to go through some sort of a third party to enable that payment transfer, right? Could be like a credit card, PayPal, uh, you, you know, bank wire, something. Um, but all of these parties are very centralized. And so um, what Satoshi did was came up with a way that you could have a the third party would really be a decentralized network, right? So you still need someone to facilitate that transaction, but it's not a centralized party anymore. It's a decentralized network of thousands of nodes running across the world, and nobody can shut it down. So that became, something completely new and different that the world had never seen before. And there's a lot of neat properties that cryptocurrencies have. It's basically global. Wherever you have internet access, you're going to be able to use cryptocurrencies. It's borderless. It's very anonymous. You don't need a bank. People that are bankless can get involved with it. There's no one party setting its price. I mean, so lots of really cool features that it has. But, also there's a lot of risks that come with it, right? You can easily get scammed. There's a lot of hackers out there. You end up using uh, third party that you trust, like exchanges or maybe wallet providers, to you know uh, hold your crypto, and then that's where you can get scammed. So you have to be really careful of those risks as well. So basically, yeah, cryptocurrencies are starting to become a new type of a digital asset. Now we've been seeing that Bitcoin's been there for over 10 years now. A lot more of the more traditional financial institutions are starting to wake up to it. And, they're starting to take notice that, hey, this is not something that's going away. This is a new form of, money. It's something that the world has never seen before. And, a lot of them are looking at it as a new type of a, digital asset. And it's really starting to, awaken now. So there's lots of different cryptocurrencies that are out there. Some of the top ones out there currently, you could if you use sites like CoinGecko.com or CoinMarketCap.com, you can readily find a list like this. Bitcoin, Ethereum. I won't mention Ripple. I don't really think that that's cryptocurrency. Tether, it's not either. Although these do have like high market, caps. But Bitcoin Cash, Chainlink, Litecoin, Polkadot. Now some of these are platforms, and they're not just a cryptocurrency. They're actually a smart contract platform. But there's a lot that you can learn once you start getting into this space. And some of these are tokens like Chainlink and Binance was once a token. So there's you're going to have to when you're coming into the space, there's a lot of learning that you're going to have to do to understand even like the difference between coins and tokens. So coins just are what's transferred natively on a blockchain, uh, and they're used to pay the gas and transaction fees. Tokens are really created using smart contracts or some other mechanism, and they're not the native currency, but they just represent assets. And so tokens could literally be something like a stock, for example. That's probably the easiest way to think about it. So the market cap of cryptocurrencies, when I first saw it, I think Bitcoin was, I think, not even $1 billion market cap. But yeah, so over time, the market caps, which is essentially, the price per coin times the number of coins that are out there, that overall value is increasing, year by year. And so now we're close to like $500 million market cap, which is, approaching some of the big companies that are on the stock market. And but I think it still really has a long way to go, in terms of like, if the crypto space becomes its own asset class, then it should be competing with other things like, gold, or the stock market, or real estate market, things like that. And all of those have, trillions of dollars of market cap. And then of course, the biggest asset class out there is the derivatives market, which is in the quadrillions of dollars. So that just like dwarfs everything else. And there's a possibility that, derivatives can be done through decentralized finance, and that sector could explode due to that. Um, so yeah, and then, the other thing is that a lot of people are also expecting that Ethereum's market cap may possibly catch up to Bitcoin's market cap in the next year or so. So that's, something to look out for as well. And CoinMarketCap has a really good graph of the different coins and what their market cap is. And so you can compare like a dominance of the different coins and what percent of the overall market cap that they contribute to. So, of course, the price, it's been increasing rapidly, and a lot of people don't really understand why it is that the price of Bitcoin has gone from being like less than a penny uh, up to, being, worth like $20,000 as it is now. So, when I first came across Bitcoin, read the white paper and I was just totally taken by it. I almost didn't sleep for a week after that. And the first thing I did was, try to mine Bitcoin, and, got it. First, we tried to mine it using a computer, realized that wasn't going to work very well. Then we got a GPU card and mined Bitcoin using that. And after about 1 week, we generated about $3 worth of a Bitcoin. And I just spent like $350 on the GPU card. And so I could see right away that, you know what, I'm not going to be able to compete trying to mine Bitcoin, but somebody else is mining it. And so it's better for me just to buy it. And so that's where I realized the value of Bitcoin, because I knew that this is something that's transferable, and that, somebody's not just creating this out of thin air. A lot of times you'll hear it on TV, and, some of these people say like, oh yeah, Bitcoin's just created out of thin air. It has no value. No, that's not the case. It has value. It has a production value. So every miner knows how much they spent on creating that Bitcoin, and they're not going to want to sell it for less than that. But the people that don't have Bitcoin and want to use it for transferring Bitcoin, or to add it to their portfolio and hold on to it, they see the value, and they're going to have to pay at least what that miner wants. And if a whole bunch of people start wanting it, the miner is going to be able to ask for way more. So this is why you have the type of, bubble cycles that we have. And yeah, I remember who was one of the early Bitcoin developer, not Gavin Woods, Gavin Anderson. He said back in 2011, Bitcoin is really just like a digital commodity, and it's going to have lots of bubbles. And he's absolutely right. So, if you're coming new to Bitcoin, one of the first things, you'll be interested in, like, is, how can you acquire it? Um, so, back when, like when I started with Bitcoin, the only way you could acquire it was through an exchange in Japan called Mt. Gox. And, I tried, I sent like $100 there. It took like a month and a half to get credited, and the price of Bitcoin went up like probably 10x by the time my money got credited. And then after I bought it, of course, then it started dropping, and I, didn't think it was even worthwhile selling it and trying to recover the money. But nowadays it's become a lot easier to buy Bitcoin, where you can use services like Coinbase, Circle, and then there's a lot of other U.S. based exchanges that are very reputable, Gemini, Kraken, and then now the latest addition to this is PayPal, which is going to allow people to buy Bitcoin through their PayPal account. And more recently, we've also had an announcement that the Office of Currency Controller has allowed banks to be able to let their customers buy and sell cryptocurrencies. So you might be able to go to Bank of America or Chase, or your whatever bank you use, and be able to open a cryptocurrency account and just buy it through your bank, pretty much like how you would with the stock or something. So these are the kind of things that are expanding, the access to this asset class to more and more people. But for those who, got in early, they really had to jump through hoops to try to get their Bitcoins. I mean, I remember I had to run my own Bitcoin wallet just to even hold it. It was crazy. Nobody would do that nowadays. So, the future of cryptocurrencies is definitely something that there's a lot of debate about. You know, if you hang around Leon or myself and the other people in the Dallas crypto group, we're going to be telling you that, hey, this is, great. This is the future, and it's where things are headed. But just keep in mind that we're living in a time where there's this huge established system that's already out there, and they have a lot of control of the monetary system. And so really what I think is going to happen is we are, as Bitcoin and cryptocurrencies start to become more pervasive, we're going to see some sort of a a battle between the new money and the old money. Old money is not just going to, turn over and say, oh, okay, here's the keys, take over. I think there may be a lot of regulations that are put in place to make it difficult to deal with cryptocurrencies. Some of the things that we think are great right now, like banks being able to offer cryptocurrencies to people, longer terms, those may not be such a good thing. I mean, what if once that's established, what if they say, well, you can't have your own individual wallet, you can only hold cryptocurrencies through the banks, right? That would be terrible. But just keep that in the back of your mind, that there's still this huge um, system that's out there that pretty much has unlimited wealth and can, create as much money as it wants. And that system is not going to just, hand over the keys. Um, but, you know, having said that, there is a lot of innovation still happening in the space. And I think the blockchain space, is really going to be able to continue making a lot more progress and bring about a lot of really cool innovations that the world has never seen before, and make a lot of new things possible that we can hardly imagine right now. And with Shardist, that's the key thing that we're trying to shoot for. We see that the blockchain is the key technology. We see that having the ability to have blockchains that can process, thousands, millions of transactions per second one day is something that is really needed. And we need to do that in a way where we maintain a high level of decentralization. I mean, if you're in this, space and following cryptocurrencies, you're probably very familiar with like the second generation uh, blockchain type platforms that are coming up, right? Like, Solana, Algorand, Elron. There's a lot of projects that are coming up, and they promise to offer you thousands and thousands of transactions per second. And so, people will look at that and say, oh, well, okay, we've already solved the scaling issue, but there's one key difference, right? So they're doing it by sacrificing decentralization. So if you look at how all of these systems work, uh, they're basically using a much smaller number of nodes, and those nodes basically take turns producing the blocks. And so, that's why it's able to go a lot faster. It's almost kind of like they're cooperating. And you can't become a node in that system. You can't just spin up you can't even buy a very hefty computer and try to join that network. You pretty much have to get voted in, or some other way that you get accepted to become a node operator. And so it's becoming not so decentralized, right? And so the key to what Satoshi built was a network where anybody could spin up a computer at home and join this network and contribute resources to it while they were using it, and then disconnect from it. And you know no one really saw that you were gone, or it affected anybody, because there's always other people coming up and contributing to the network. And really, when you look at that model, you can see that Satoshi really kind of built that off of like the BitTorrent model. If anybody's familiar with how BitTorrent works, it's a peer-to-peer network for transferring large files. And you know you can just run a BitTorrent client on your computer, connect to that network, become a part of it, contribute resources while you're using it, and then disconnect from it. And so that's one of the key to how I think Satoshi really wanted to design Bitcoin to be. And I think we're starting to lose sight of that. We're getting so tied up with, hey, we just need to make it work faster. And so eventually, what I see happening in the future is that we're going to have some sort of an event where some of these networks get subpoenaed by a government, because there's a group of node operators, right? So there's maybe 20 nodes or 50 nodes that are processing the blocks, and who those node operators are. The government could say, okay, we want you guys to go and block this account. And now what do? Right? Do you follow that? If you do, you've just proven that this is not a decentralized network. And, everybody who thought that their money was secure on that network now has to doubt it. And if you don't follow that, well, you're exposed. The government can come after you. So what are you going to do? And so this hasn't happened yet, but I do see something like this happening maybe in the next 5 years. And that'll really expose how undecentralized we're becoming. And at that time, we'll start to like awaken to the original idea that Satoshi had, which is, hey, we need to maintain decentralization. Otherwise, you might as well just go back to using banks, right? So, that's one of the key things that we're trying to preserve with Shardis. And doing that is not an easy task, maintaining a high level of decentralization while you also try to increase the scalability of the network. But that's something that, we actually demonstrated almost a year ago, linear scaling, where as you add more nodes to the network gets faster, just proportional to the number of nodes in the network. And I haven't seen any other project really demonstrate that yet. And so I think we've come a long ways in building what we're set out to build. Right now, we're kind of wrapping up a lot of the loose ends that come with that, and hope to have that product more readily available. In the meantime, we've also built an application using Shardis, which is called Liberdis. And if you go to test.liberdis.com, you can actually try it out with your web browser and see what an application built with Shardis would be like. And it allows you to transfer coins, send end-to-end encrypted messages to one another, and a lot of cool stuff. So try that out. And so with that, I'm going to wrap it up. And I'd like to turn it over to Shahzad Nutni, who's also a member of the Shardis project, and he'll wrap it up. So over to you, Shahzad.
Thank you very much, Omar Sayed. That was our CEO and Chief Architect at the Shardis project. I would like to thank everybody for attending this presentation. A special thanks to Mitt for having us here. Mitt is doing some phenomenal work in his options education series, and also to Leon Gubbin, who's part of the Profit Makers. I've seen some of their videos, and the education they provide is just phenomenal. Finally, if there are any questions arising out of this on cryptocurrency, on the blockchain, on the Shardis project, I'm available after this anytime via email or phone as well. My contacts are available with Mitt, and I'll be more than happy to talk to you one-on-one or give you more details as required. Once again, thank you very much, and over to Leon or Mitt.
Okay. So thanks for going over this. This is amazing. At least we have a lot of folks that haven't been exposed to cryptocurrency, so they're here mostly. Their focus has been in the option space. I just want to open it up for anyone that has questions, from the simplest to the most complex questions for Omar in terms of crypto. Feel free to speak up, and let's get that answered, because this is an open forum discussion, so feel free to bring up your question here.
I have a question. Hi, Shahzad and Omar. So is Shardis a platform? So I am relatively new, so this is a basic newbie question. So I see wallets and exchanges. What is Shardis? Is it another exchange, or how should I understand it at the fundamental level?
Yeah, so that's something that's very confusing to people when they first hear about Shardis. So you can really think of Shardis as sort of like software that helps you build something else, right? So, for example, if you're going to build a website, behind the website, you need to have a web server that can, serve the website, and you need a database. So with that, you can build a website. Well, now, if you want to build a decentralized network, Shardus is the software that makes it easier to create a decentralized network. Now, what your decentralized network does is something that you're going to, define as an application, right? Like maybe you're building a decentralized network that's going to be the equivalent of Reddit, for example, or maybe you're building a decentralized network that's a matchmaking service, or maybe you're building a decentralized network that's just going to do coin transfer, or sending messages. So that's your application level, but Shardus is what comes below that. And so Shardus is really software that the developers will be using to build the decentralized application, which then end users would be using.
Okay,
So
so your customers are not people who are buying and selling Bitcoins. Are
right.
your customers people who mine Bitcoins?
Um, so that so once an application is built with Shardus, you could have people that mine, cryptocurrencies, or try to run validator nodes for cryptocurrencies, join these networks and
Okay,
become part of those networks, right? So
okay.
now that but since you mentioned that, so there is something that I didn't mention throughout my whole presentation, which is that we do have a ERC20 token called the Shardus token, and you can find that on CoinMarketCap and CoinGecko, and that is a token that we use for licensing the software, right? So we're developing this software. Typically, when a company develops software, they sell the software, receive US dollars, and then eventually the profits from their software sales are distributed to the shareholders of the company, right? Now, we kind of have a similar model, but we've tokenized it. So rather than sell our software for US dollars, in order to get a license for the Shardus software, someone will have to acquire Shardus tokens and send them to our smart contract, which takes those out of circulation and gives them a license token. And what that does is it reduces the supply of Shardus tokens. And so uh, currently, the supply of Shardus tokens is increasing while we give these tokens to people who contribute to the project. And then those people can go and sell those tokens on exchanges, or sell it to friends and families and so forth. So there is a token that's behind this right now, and the token is what allows us to keep the project going and keep it funded. And in the future, that token will be needed to license the software. So there is a coin aspect to Shardus in a way. So
It's like giving shares. Seems like it's like giving shares to.
yeah,
but
absolutely. Except the key thing that we have to make sure that we follow with this is that we never sell our tokens directly in exchange for US dollars or for other cryptocurrencies. So we only give the Shardus tokens to people who directly contribute to the project. So yeah, and as long as we follow that, it doesn't get qualified as a security. So
Mhm. Okay. Thank you for answering my questions.
mhm.
yeah, I just wanted to add to that actually, is Omar's team has been working heavily on use cases, and they're working on different use cases in the industry, right? So is applying the Shardus backing and the technology behind that to different innovations, like in the healthcare industry, in different initiatives they're coming through. and Libertas is just one of them, right? So it's a whole idea of building an ecosystem where you can do cost effective ways of building use cases, blockchain use cases out of. And I see the value in that because if you are to do these use cases on Bitcoin, Ethereum, and all these more advanced coins out there that have been promoted heavily, it becomes very costly to do it in that ecosystem, which is not even proven in scalability. They're having to scale out, and they're doing it within a small ecosystem. So in our case here, oh, they're not here to kind of sell us a coin or anything. Just educate us on what they're doing differently with this technology. What I want this team to do is ask questions about crypto, blockchain, anything you all want to know about this technology to understand better. Because some people are still clueless about this technology. What is the key question that's running in your mind that needs to be addressed before it sparks your mind that this technology makes sense to you? Like, what is that key question? Feel free to ask it out here, right? Because they've built a technology, they know what's behind it, and that's why I call them crypto makers, because they made a crypto function out of this, right? Go
I have
right ahead.
so do you guys spend for the marketing for this project, or how do you like see in the future, like down the line from 5 to 10 years?
Yeah, I mean, a lot of times, uh, like the crypto projects that are out there, they spend a lot of money on marketing the project, and creating a lot of hype and so forth. But we tend to look at ourselves more like a software company that's building some key essential software, right? So like if you look at the company that makes MongoDB, or the company that makes Couchbase, you don't see them like hyping themselves so much to the general public, because they don't really need to. We see ourselves more like we're a B2B company, and we really need to reach out to the projects that could potentially use our software, right? And so and then once our software is used in those projects, of course people will hear about Shardus more, because well Shardus was used to build Libertas, or Shardus was used to build PeerSwap, or whatever project it was used to build. And through that, more people will look at that, because just the way that word of mouth kind of spreads the information about, like, hey, what did these guys use to build their website, right? Oh, they're using MongoDB, or they're using Node.js on the back end, or whatever. It's really the developers that need to know about Shardus, right? So with that in mind, we haven't really done like too much in terms of like trying to market to consumers. So
Mm.
So I guess if I wanted to add to that, Sundar, is if you wanted to create your own version of coin that does something, they can provide the back end technology that is far better than Bitcoin and Ethereum to build your coin technology as a business owner, right? So that's kind of like the back end, and then in the front end, like, or the middle ground, where they're using JavaScript technology, just basic coding languages, to make it seamless for an average engineer to code the front end part of it, or the middle ground part of it. The back end is definitely sophisticated or something in terms of the patterns and the scripts, which is what they would be licensing to the inventors, kind of thing. So that's their business model.
Got
But I really want people to ask questions about how the crypto works, or anything that you all feel like asking. It feels like people are already sold on crypto the way it works, but what is it? Anyone have any questions of that sense at all here?
I do. Sorry about that with the
No,
phone
no,
call.
go ahead, George. Yeah.
I apologize. So I've been in the crypto world for quite some time now, about 4 or 5 years, and I got into it. I bought some Bitcoin. I transferred my Bitcoin to Ripple, and I know that was a big mistake. But my understanding with cryptocurrency is that it's a peer-to-peer transaction, negating a third party. With that being said, Ripple has been more in tune with the U.S. government, and they are doing a lot of things with the U.S. government. So wouldn't you say that Ripple is a little bit more ahead, not ahead of the game, but is complying with like certain U.S. laws? Correct me if I'm wrong.
Yeah, totally. And it, like I said, there's going to be some battle that's going to be brewing right in the future. I mean, there's this view of you know uh, the wild west view of cryptocurrencies, where libertarian type people uh, don't want any regulations. I mean, they totally believe that money and state should be separated, right? I mean, there was a time when religion and state were tightly coupled, and we finally are living in a world where uh, religion and state are not tightly coupled, but we still have money and state tightly coupled. Is does the future really need that? Do we really need governments to be dictating what people use for their money, and imposing a lot of regulations on people? Uh, you know, uh, that that's something to be determined, I think, yet. Um, and so if you believe that the future is one where governments should kind of you know, set compliances and regulations and things like that, putting your assets into things like Ripple and Stellar. Stellar is also, getting pretty close with, the bankers and regulators. Ripple's been like that for a long time, but now Stellar is also uh, becoming like that as well. That would be the horse to bet on, right? If you're from the camp that, hey, the world should be very, like money should be anonymous, governments shouldn't have nothing to do with it. You know, that's where you go put your, bets on Bitcoin. And if you want to go further, you could put it on some of these completely uh, what were those coins that are very hidden in terms of like what transactions are being done, right? Like Dash, Zcash, and then there's some newer ones coming up, like um, Grin and Beam. And so, these kind of things, so there's going to be these different perspectives that people have. And uh, for a long time, people could not even challenge it. They had like no say in the matter. But cryptocurrencies have at least given people a way to express their view, by saying, I'm going to move my money out of banking systems and put it into cryptocurrencies. And so if you don't want to take any chances, you could put it in both, right? Like put some in some of these you know really libertarian type cryptocurrencies, but also put it in things like Ripple and Stellar and some of these stable coins and things like that. So yeah, I mean, I never like to pick any one thing or the other, because the future is very hard to predict, and you always have to play a probability game. Yeah.
Another question, sorry. But I've also invested in other blockchain stocks, such as GBTC, Riot has been doing very well for the past couple of months. I think it correlates with how Bitcoin is doing. What is your honest opinion on those stocks, and what do they kind of represent?
Yeah, so these stocks are, their valuation is now being like really closely tied to cryptocurrencies, and a new one just came out. I think it's called BITW. A friend of mine, Mark Maddox, made a video about it just today on YouTube. And I saw that, and so there's another one, BitW, and then also MicroStrategy is now like buying so much Bitcoin that their valuation is going to be dictated by the amount of Bitcoin they're holding, instead of like how much they're making money by the business that they're running. So I really think that for people that want exposure to cryptocurrencies but don't want to deal with actually having to deal with crypto wallets, even thinking about what an address is or what private keys are, none of that. This is definitely the route to go, and I think there should be a lot more stock type investors that should add a little bit of these type of stocks to their portfolio, just to diversify and have some exposure to the crypto market as well. And so now like these types of stocks make it very easy to do that. So yeah, no, I'm kind of gung ho about those stocks.
Yeah, so we've done quite a bit, George, on Riot. So I'm a premium seller by nature, so we hedge our way into Riot, and definitely ride the wave on Riot, which is kind of backed by blockchain. So in the option space, we have a lot of strategies where you could be wrong and still monetize as well, in terms of direction. So yeah, no, this is good knowledge to know that there's some equities and stocks that we could invest in crypto. Yeah, I prefer stocks that have option markets for. So not all of them do yet, but if they do have options
Of course.
market, I'm in the game for sure.
Yeah.
Yeah. Another good company is Silvergate Capital. They don't have any options, but they were one of the first banks to fund companies like Coinbase and BlockFi and other big names in the crypto space, but only shares.
Would you guys say that Coinbase, and I'll even throw Binance in there, are kind of like, I don't know, like the TD Ameritrade or the Robinhood of stocks, of crypto? Would you say that?
Oh, exactly. Yeah, they're basically broker traders. Yeah.
Okay. So would the markets realize that, and is that any way that potentially in the next few years we could see IPOs on them? There'll be
Uh,
IPOs.
yeah. So Coinbase, is going to IPO. There's no date given. And this is just my opinion, but I'm going to throw a lot of money at the Coinbase IPO day one. I don't care what the price is. If it
Yeah,
crashes
right next
100%
to you,
next
man.
year, dude, this is a $1 trillion company, in my opinion. Yeah.
No, of course, and I totally agree. And I'm one of the people that invested in cryptocurrency in 2017. I was heavily into it, and I guess it kind of shot me in my stomach when I saw the market kind of crash, you could say, during the new year of January of 2018, and that's when you saw like the downward trend.
Yep.
So I kind of got hesitant on it. That's why.
Yeah. So let me speak to that. So when people look at cryptos, the first thing they see is, "Whoa, this thing is like it will drop so much, it goes up so much." So that is volatility, and the reason why that happens is because it's a nascent asset class that's just been around like 10 years, right? And it's volatile because you have so little, relative investors, right? We have tens of millions of people in it, right? And the stock market has a way more multiplier of that. but this is growing every year, right? So eventually there'll be 100 million people in cryptocurrencies, and eventually like a billion, right? So as it matures, that's when the volatility starts going down. But when the volatility goes down, that means, I mean, these cryptos are way like higher and more stable and captured so much more value. That's why they're stable and not so volatile. But all early markets are highly volatile when asset classes are highly volatile when they first got created, and asset classes don't come around every like decade. They come around every like few centuries.
And,
Yeah, that makes
and to add to that, I mean, what you're looking at today is a market which is right now purely being driven by just the coins themselves. In the very near future, you will see a lot of derivatives that will come to play. So if the market today is about, say, $500 million just for the coin class, and just NASDAQ is about $17 trillion, just think about the derivative market which rides on NASDAQ. I mean, that is multiples of that, right? So if the coin class by itself touches a few $1 trillion, imagine what will happen to the second class of derivatives, which are now just starting to come flow. I mean, what you just mentioned about BitW is sort of falling into that class, which is betting on Bitcoin, right? So there are going to be several other derivatives which will come into play in the very near future.
Yep. No,
Thank you guys
that's
so much. I really appreciate the knowledge that you guys gave us. It gives me more confidence to invest more into cryptocurrency than I did 4 years ago. Again, I appreciate it.
And just so that everyone knows, I'm very impressed with the technology that Omar and Omar's team has put together for Shardus. Although it doesn't serve us as an individual community today, those who are heavily involved in crypto projects or building their own crypto ecosystems and all that, they will benefit out of Shardus, not us. But what I do admire is, he's built an ecosystem which is very unique, scalable, that that Bitcoin, Ethereum, and those big names have not successfully even addressed those questions out in the future. It's like when I was working at AT&T, you had like the 2G technology, 3G technology, 4G technology, and 5G, right? So now, I can already foresee Shardas has the 5G, 6G technologies that you cannot even see today, right? You can see them in the future, right? And they've already built the groundwork for it, so it's ready to go, and other companies will leverage off their patents and utilities that they've kind of built around this technology, which is not prominent out there today. So maybe in the future you'll probably hear them. You'll probably be impressed because you were part of this discussion, today, and they're going to be serving the future of this decentralized and distributed networks in the future, as a software solution, as a crypto solution, as any kind of solution in this environment. So
Had, had a question, from our just primarily around the technology behind the scenes, right? So inherently, I think the transactions that you do for within blockchain, it takes a lot of time, right? I mean, I think 60 minutes or something like that, right? But then I think there's a lot of use cases out there that people talk that it can be used here, there, IoT, and all over the place. How do you account for this transaction delay on in use cases where transaction speed is critical?
Yeah, no, that's a really good question. Like you said, with Bitcoin, for example, the time for a transaction to be finalized, meaning that you think you received the money, and then knowing that, okay, this transaction can't be reversed anymore on the blockchain, because it went down a different fork, and then you didn't actually receive the money. You actually, if it's a big value transaction, like say you're selling your house or something like that for Bitcoin, don't just hand over the keys when as soon as you see that Bitcoin come into your wallet. You should at least wait for an hour because there's a chance that that could be reversed. So that's referred to as the finality time. And so with blockchains that you know um, the time for finality is kind of linked to the rate at which the chain produces blocks. And so you should wait at least for about 6 blocks on the Bitcoin blockchain, at least I think 10 or 15 blocks on Ethereum and so forth. But one of the things that we've tried to do with Shardus is reduce our finality time to like within 10 seconds. Um, so if you go and use like test.liberdis.com and you send a message or send a coin to somebody, your app will show that transaction has been completed, and it'll take maybe about 5 to 15 seconds. That time is actually the complete finality time. And in a network that's running on thousands of nodes, globally, it's almost very, very hard to reduce that finality time to less than about 7 seconds, just because that transaction needs to get distributed to all of these nodes across the world. They all need to process it and so forth. Now you do have networks that are like the second generation platforms, like EOS and Solana and Algorand and all these networks that are popping up where they have a lot fewer nodes, and the nodes are pretty much taking turns producing the next block. They can offer finality times like maybe a second or two. And the reason why they can do that is because a lot of those nodes are run by big operators, and they're all pretty much in the same data center. They're not really distributed across the world. They're all those big nodes are pretty close, and all the operators know each other. And so when you limit yourself to having all your nodes in a very close network, then you can and of course the nodes are also cooperating so that one node is not going to try to produce a block when it's not its turn. And so you have a better guarantee that you're not going to have forks. So those type of networks can offer pretty fast finality times, a second or two. And then if you need to get even higher than that, right? And like suppose you want sub-second finalities. For that, the only thing that you can do is do transactions which are pretty much off-chain, and they're kind of guaranteed by the signatures that the participants put on the transaction. And eventually, once a whole bunch of these transactions have been collected or finalized, then one transaction can be submitted to the blockchain to reconcile all of those hundreds or maybe thousands of transactions that happened off chain but are still secure because they're designed cryptographically due to the signatures that the participants put on there, that it can't be faked, right? So that's the kind of way that you could get to like sub-second transactions and really very high speed transaction throughputs. And so there's even some platforms that are looking at like maybe streaming coins, right? Like as say like you download a video or something like that, your client might be streaming payment to a server for the video that you're watching, second by second. So people are actually looking at those kind of technologies as well. So, but yeah,
Yeah.
I mean, there's ways, and there's a lot of innovation happening out there.
Thanks, Omar. And then another question I also had was around, the seeming contradiction around the underlying technology, right, in blockchain is that it was, I think, originally created for decentralization and to maintain some sort of anonymity, right, for transactions. So, but then, how does that work, right? Because if you're storing everything, you can always track it back to its point of origin. So how do you get over that anonymity? When it's asked for or subpoenaed in this case, right? For example.
Yeah. So, like with the Bitcoin blockchain, you can see all the addresses and all the transfers that happen. Now, um, if you know how to use it properly, you can maintain your anonymity on even a blockchain like that, where you pretty much use a new address for every transaction that you do. You never send back coins to your same address again, even like if you're sending 5 coins to a friend and then 2 of those need to come back to you. You never reuse any of your addresses. So if you have a client that can do that for you, or you're very focused on doing that, you can maintain full anonymity on even a blockchain like Bitcoin. Of course, people don't go to those kind of extents to do that. They just like post the same address everywhere and reuse the same address. And because we don't have anything to hide, right? So why worry about that kind of stuff? So, uh,
Right.
but now the other thing about subpoena, so you're actually um, maybe talking about the block producers. So yeah, like we do also want the nodes that are contributing to provide this network to be able to maintain their anonymity, right? You shouldn't have to get voted in to become a block producer, or have to disclose who you are to become a block producer. You should just be able to join this huge network of say 10,000, 20,000 nodes, contribute to that network for a day or a week or a month, and then disconnect, and then maybe join another network and contribute your resources to that. That is the kind of world where you're going to have true decentralization, where nodes can contribute anonymously, and you have networks that are thousands of nodes. But until right now, we're actually not giving a lot of thought to or importance to that. Right now, we're right now in a phase where we just want things to go faster, and we're trying to solve the scalability issue right now, and eventually we'll come back to recognizing the importance of decentralization. But yeah, it's not going to be a straight path to that.
Right.
So,
Thank you.
mhm.
Alrighty, so we're gonna end this at this point. Folks, you're welcome to join our Discord link. Shazad Bhai, he's actually on our Discord. So if there's any specific questions you have, we have a crypto channel there. Leon kind of oversees that crypto channel, keeps things up to date. And anything new out there in the crypto space, we try to keep up with it and post it in the crypto channel. And we have representation from Shardas as well there. So you're welcome to post there and ask him any questions you have. Appreciate their time being here today. I'm just profound to even have them here. It's just profound to have them here because they've actually developed the technology behind a crypto solution. So especially anyone that's a developer here and they have ideas in putting a software project together, you can definitely bounce it off them, and they've kind of built the actual initial source there. So you're just adding to that layer of the technology that they have built. So you're welcome to do that. And pretty much open book here. So feel free to ask any questions. And as you all know, we're gonna keep up with this in the option space. And the future videos that we're gonna have in this space is selling premium on crypto options. So So we're definitely keeping that up to speed and staying on top of that as well. Cool. Have a good one, everyone, and thanks for being here today. Thanks, Omar. Thanks, Shehzad.
Thanks, guys.
Thank you
Thanks
very
for
much.
having us, guys.
Thank you,
Thank
Leon.
you. Thank you.
Appreciate it.
Bye bye.
All right.